Hello and welcome to another Smaulgld live stream. It is Friday evening, the 22nd of February 2019, and tonight's topic is Bitcoin a tragedy or celebration of the commons? Now don't worry if you don't know what the tragedy of what the concept of the tragedy of the commons is. We're going to explain what that is and then also compare it to whether it is a celebration of the commons. So is Bitcoin a tragedy of the commons or a celebration of the commons? We've got that coming up for you, as well as some crypto news, some interesting gold mining news, some interesting news about American silver eagles. So let's get right into the stories of the day and the pricing action of gold, silver, and cryptocurrencies and the equity markets. Very interesting day in the markets. The markets were actually up today. A lot of talk about, well, maybe there might be a deal with China, and it looks like, from what they're saying, that the deals are headed the U.S. way. Maybe they get an agreement on China and making sure that its currency doesn't devalue too much. Not sure. There isn't really any firm news, but that's just how these markets are. They trade on tidbits of news, tidbits of rumors. And generally, good news is good news, bad news is good news, any news is good, and the markets reacted today with the Dow Jones climbing 181 points. That's up 0.7%, topping the $26,000 mark, 26,000 mark. The Dow Jones Industrial Average is now at 26,031. NASDAQ up almost a whole point, up 0.91%, up 67 points to 7,527. And the S&P 500 pulling up a 0.64% gain to 2792. Now, gold had a decent day, not a great day. It went up a little bit. It went up $3. It had been as high as $13.32. It closed around $13.27, and that's where it is at the moment, and that's where it's going to sit until Sunday evening when it starts trading again. Now remember, gold has held that $1,300 mark, has not lost it. Silver, however, did lose the 16 handle, and today, though, made up some ground heading back to that. It went up about 10 cents. That's a 0.61%, and it closed at $15.90, and that's where we are right now. That is a better gain, however, on a percentage basis than gold. Gold was only up about 0.4%, silver up about 0.9%. So silver's gain today was doubled. This is a good thing if you want that gold-silver ratio to come down. Speaking of which, there it is. It did come down a bit. It went down to 83.52. Now, in other news, some very interesting news. Well, first we're seeing... excuse me, we're seeing some interest again from the mainstream media on gold. It's a Wall Street Journal. Gold prices have climbed as investors uncertain about the global growth outlook hedge their portfolios. So they're not saying that gold isn't a hedge. They're saying that people are doing what people do when they buy gold. They're hedging. Worry investors reach for gold. Headline from the Wall Street Journal. Investors are buying gold again, is concerned about a slowing economy, putting a premium on safer investments, I guess, like gold. Now, in other gold news, we have covered both the Barrick merger with Goldcore and the Newmont mining mergers, but now it looks like Barrick wants to potentially do a hostile bid for Newmont. Now remember, Barrick's made a big acquisition, was the largest acquisition to date. Then Newmont topped it by buying the fourth largest mining company. So the number 2 and the number 4 miners joined together, creating the number 1 mining company, Newmont. And now Barrick wants to be number 1 and buy them both all up together. So it says Barrick Gold considers hostile $19 billion bid for Newmont. Now that would create a mega gold mining company consolidation. It would probably have a lot of antitrust issues. That would be by far the largest gold mining company in the world. We'll see how that goes. Now, interesting news about silver. This didn't get much attention. don't know what to make of it. I'll give you my thoughts on it. U.S. Mint sold out of Silver Eagle coins again in 2019. Now, what's interesting about this is in January, the numbers for American Silver Eagles were about 4 million, a little better than last year's January, but not quite like some of the big months of January in prior years since the financial crisis, where we've seen up to 7 million American Silver Eagles sold in January. Now, in February so far, according to the U.S. Mint's website, they sold another 2,057,000, which is okay. I mean, it's not. And remember, in 2015 and 2016, they were averaging over 4 million a month. So the U.S. Mint clearly can churn out 4 or 5 million, they did in January this year, American Silver Eagles in a given month. And yet, they're saying this is to inform you we have temporarily sold out of our inventories of 2019 dated American Silver Eagle coins. In addition, all remaining 2018 inventories have been sold out. Well, that's not surprising. They only made like 15 million of those last year, 18 million in 2017, 15 million in 2018. So it's not surprising that they don't have any inventory of the 2018s. Now, I say the West Point Mint is busily producing additional 2019 dated American Silver Eagle bullion coins, and we hope to be able to relaunch the 2019 dated coins in a few weeks. And that sounds like, to me, not that there's been tremendous demand or there's some type of silver shortage, but that the U.S. Mint underestimated demand. And the reason the U.S. Mint has had trouble in recent years keeping up is because, for whatever reason, they have outsourced their planchets. Now, the planchets are the blanks. They're called blank silver blanks. They are effectively a 1 ounce round with nothing on it. Blank on both sides. I should have a picture for you, but I don't. But you can imagine, just take Lady Liberty, Walking Liberty off, take the eagle off the back, and just picture a round. No reeds, nothing. It's just a planchet of silver, 999 fine silver. And they buy those from 3 private mints, and they outsource that. They don't make them themselves. They get them delivered. And then what the mint does is they run those planchets through the mint stamping machine, and they stamp the eagle on them. They stamp the Lady Liberty, and bingo, you have your American Silver Eagle. Don't know why they do it that way, but that's how they do it. Well, it looks like they're out. Now, why would they be out? A lot of people, silver shortage, game over, game changing, the whole story. I don't think so, but it does indicate, I believe, that I think the mint is well run. I think that they just didn't expect, after 2018's lowest year since 2007, that 2019 they probably thought would be a continuation of lesser demand. I should have the chart, but I can explain what happened. In 2015, you had 48 million American Silver Eagles sold. And then in 2016, you had 36 million sold. 2017, going from memory, about 18 million. 2018, 15 million. So they figured this year, if they do 15 million, they weren't expecting probably February's follow-through sales of 2 million after selling 4 million in January. Now, because they're off, it says they're not going to have them for a few weeks. Take it for what it's worth. Actually, what I'm going to do right now, I do track, I didn't take a look at it, but I do track the American Silver Eagle premiums, and I'm not sure if the mints, the bullion dealers are starting to charge a premium, given that they're not going to have American Silver Eagles coming in. And it looks like, no, it doesn't look, it looks like the premium, oh, it has gone up to 26%. Now, I'm not saying that this means that you do what you want, but some people, when they see the mint is out of silver, they get exhorted to go out and buy. Game over. There are never going to be any Silver Eagles left. This is it. Go out and buy now, or you'll never be able to get Silver Eagles again. And people did that in certain time periods, and they paid hefty premiums. But those premiums come down once the pipeline fills back up, and then you have the Silver Eagles. Now, it's possible. I'm not advocating that this is what's going to happen. It's possible that the U.S. Mint is the canary in the coal mine, and the the 3 companies that send them planchets, that's where it hit first. They don't have the silver. They can't produce the planchets. I doubt it. Now, actually, if you wanted to play that theory, which I wouldn't, but if you wanted to play that theory, I wouldn't run out and buy American Silver Eagles at the premium. I would buy the other silver and see if it's available, because if it's available at the normal premium. And this way, if it does turn out that there's some outrageous thing going on where it's silver shortage and game over and silver to skyrocket and JP Morgan, whatever other stories you want to believe, COMEX default, this is it. Physical is going to overpower the paper price. If you believe all that stuff, I mean, this is an investment advice. I'm just saying, theoretically, the way you would play that is you'd buy the you wouldn't pay the premium now. You'd buy the others while they still don't have a premium. I don't even think that's the case. I'm just saying that if that were the case, that's how I would play it. But I'm not playing it at all. We'll get your thoughts after. By the way, when I do a live stream, some people, the people that are used to it, and they come every night, all the Smaulgld mug stackers and game changers, they understand how the format of the show is. But if you're new to the show, I don't take the comments until the end, and then we go through all the comments, even if it takes us a half an hour. So I'm not ignoring the comments. I'm just not looking at them at the moment. I'm trying to display today's news and whatever else we might have. All right, so now we're going to move on to the crypto markets. And by the way, platinum was big today. And I didn't get a chance to look at it, but Salivate Metal, who will be joining us on Saturday night when we have Saturday Night Silver with Smaulgld. This Saturday be Saturday Night Silver with Smaulgld and Salivate Metal. He did something on platinum and palladium, to go over to his site and check that out, his YouTube channel. But I just want to note that platinum was up 2.5% today, up $20 to $8.41, and palladium was also up $23 to $14.74. So it's possible now, if palladium's going to continue to rise, that maybe platinum will pull in the updraft, just the way I expect. If gold gets a big bid, silver will do the same. All right, let's move on to cryptocurrencies, and because that'll take us into... No, you know what we'll do? We'll do the markets, Fed in the markets. Then we'll do cryptos, because that'll lead us into Bitcoin, tragedy of the commons, or celebration of the commons. So just a couple of pieces of news today on markets. No surprise here is that year to date, according to Zerohead, stock buybacks are 91% higher. That's just unbelievable. That's according to B of A. And live squawk, Fed's Buller, that's St. Louis Fed president, unwinding a balance sheet to end before the end of this year. So it looks like the Fed has basically said, we're not going to do any more unwinding of the balance sheet. Probably not going to raise interest rates either. That's all a big departure from the end of last year, when they were talking about how many rates hikes they were going to do in 2019. But as we discussed last night, Atlanta Fed's got GDP estimates for the fourth quarter 2008 at 1.4%. This often happens. The Fed raises rates and actually continues to raise rates when in retrospect they find out they were raising them during a recession. Now, a recession is defined as 2 successive quarters of negative GDP growth, but they were raising rates at the end of last year when they were thinking that the economy was robust and was growing at a 3.5% rate. That's why they were raising rates, but they had been raising rates all year in 2018. And they have a delayed effect. And sometimes the Fed generally overshoots its mark. And I think they've realized that, or Trump has told them, or whatever. They know their job is to keep the stock market and the dollar high, and that's a balancing act. And they do that by raising rates and yakking about raising rates. And then they keep the markets high by yakking about not raising rates. And you get how the game is played. All right, that is it. Now let's move over to the crypto space. Now, one of the things about cryptocurrencies, and I've been following this, and one of the things we're going to talk about tonight is something I wrote in early 2014. I've been following cryptocurrencies intently since 2013, before they made that big run up to $1,000. A lot of people who have opinions on cryptocurrencies, they find out 1 or 2 pieces of information, and that's generally enough for them to base their opinion on, and then they can repeat it over and over again. And I get all the time people, they flat out, they give me their opinion, and that is all I need to know. They are going to zero, or whatever it is. And I don't think they really have followed it. They learned what they need to know. They learned something that they think is dispositive, and that's it. That's what they need to know. And then they tell you their opinion. And I think that's how a lot of opinions are formed and maintained. people get the information they need in order to support their opinion, and they don't even know that there's other information that undercuts that. They don't care, because they can say, this is what I know, and that is all I need to know. And this is, anyway, you get the point if you've been listening to this channel. I don't think that way. I try to constantly, I'm not looking to change my opinions. I'm looking to, not even to confirm my opinions. I'm just looking to see what information is out there, and my opinion will be adjusted accordingly if there are facts or conditions that change, or things that I overlooked, or things that have developed. Now, so for example, with Bitcoin, when it came out, I was against it. And you're going to see when we do this celebration of the commons or tragedy of the commons analysis, you'll get a glimpse of how I was thinking about cryptocurrencies. I didn't think they were worth much. I didn't understand what the attraction was, but I have since learned that, again, my opinion is really not what matters. What matters more is not what I think about anything, is what other people are thinking about and doing about certain things. And oftentimes people have opinions and they're set in them, and they think that the rest of the world is out of step. Now, maybe the rest of the world is out of step. That doesn't change the fact that if markets go in a certain direction, even though you think that they shouldn't, well, then you're wrong. I mean, you can have your opinion, and you can explain why you think the market should be going in a different direction, and you can prove why the market should be going in a different direction. But if it's not going in a direction, you're wrong, no matter how good your proof is. And we see the same thing with people who are saying the stock market should be lower. They don't understand it. The markets are screwed up. Okay, they're screwed up, but they've gone up for 7 or 8 years in a row. So you're wrong. You may have the right thinking, and oftentimes what I find is people develop followings on the basis of being wrong. And what I mean by that is they insist that the stock market is overvalued. It is going to collapse soon. And everyone thinks, yes, this person is smart. They say the stock market is going to collapse soon. And then it doesn't, and then it doesn't, and then it doesn't. And then they grind their heels in. He's just early. And they keep repeating themselves. Now, one day the stock market will fall. But the point is, people have been saying this for 7 or 8 years. Same with dollar collapse, game over, game changer. Silver set to skyrocket. And they listen to people who are wrong for years. They just sound smart because they have a rationale for why they're wrong. They don't even talk about why they're wrong. They talk about why the rest of the world is wrong, and how when the rest of the world comes around to their way of thinking, or the market comes around to their way of thinking, that their genius will be rewarded, and you'll be, it's a good thing that you were early and that you were following this person who is telling you something that's been wrong for 7 or 8 years. And that's across the board. People predicting dollar collapse, silver set to skyrocket, gold set to skyrocket, stock market collapse, game over, game changer, this is going to happen. All wrong, Shemitah this, turn dates, whatever it is. Okay. So my point about Bitcoin is, yes, I came out, I looked at it, my opinion was firm. It looked stupid to me. It was a bunch of digits running around. It proved that the system worked internally, but I didn't see the value in it. I really still don't see the value in it, other than there is value in it in the real world, and that people are willing to pay for a string of digits that are secured by a ecosystem, blockchain, cryptocurrency. They do. That's not for me to determine, just like what they call the vagaries of taste. There's a lot of crap music that's out today that people buy. I don't like it. That doesn't stop it from selling. A lot of art I don't like. Doesn't stop it from selling. So your own opinion, and I've learned this is, you don't have to think this way. My opinion is, I look at things and I say, well, what do I think of this? Would I like this? And then realize that I may be out of step. I may say, well, this doesn't make a stitch of sense. No one would buy into this. This is stupid. But if people are buying into it, then the second thing you could do is you can get arrogant and snarky and say, oh, look at these idiots. It's a bunch of tulips. Look at them. Huh, huh. And now you've got what you need to know. Now you can sit back and you say, it is tulips. That is all I need to know. And then you never learn anything else, and you really don't care or understand why people might be interested in cryptocurrencies, because you've already determined your initial reaction was it's stupid. You listen to a few people online tell you how stupid it is. Some other people tell you it's stupid, and then you can attach the word bubble to it, and now you're done. And that is all you need to know. And anything that happens after that, you don't pay attention to, you don't know anything about, you don't care. It is going to zero, and that is all I need to know. Okay. Well, I don't think that way, and I've seen what's happened, and I've updated everyone here on what's happening with ATM machines, Wall Street investment, all types of innovations that are going on, the amount of money that's been poured into the space, and then you hear, but the price has gone down. So if it has gone down, that is all I need to know, and that means it is going to zero. No, because we have history on our side now. I've been through this before. I've seen the price go up and go down, and it has had no effect on the amount of interest or money that's put into these things. The price is not correlated really to anything. It's not correlated to the stock market. It's not correlated to gold or silver. It's not correlated to the amount of input, amount of investment, hash rate. It just goes up and down when it feels like it. But what I have seen over the last 7 years that I've been following it is there are more users, there is more money, there's more infrastructure, there's more everything, and there's more interest, even though the price now is lower than it was about a year ago. However, an interesting chart, I don't have it right now, but I've mentioned this one before, is that the lowest low of each year for the last 7 years has been higher. So even though 2018 the price fell, it still put in a higher low at $3,200. And so far in 2019, Bitcoin's low is like $3,600. So we're putting in a higher low again if that happens to hold. All right, now, some stories here. Bitcoin investors in this European country can now buy crypto at the post office. Anybody who's thinking this isn't going mainstream isn't paying attention because they made up their mind last year, 2 years ago, 3 years ago. Governments are going to close it down. That is all I need to know. They will not allow Bitcoin to... Okay. We know in France they sell Bitcoin at tobacco shops. That whole argument is very outdated, that they're somehow going to round everyone up, arrest everyone. The United States, CFTC, they already have Bitcoin futures. They're going to have an ETF. They have, the SEC has a page on how to do a cryptocurrency ICO, register it with the SEC. It is a Ponzi scheme. No, they're not legalizing Ponzi schemes. They're regulating Bitcoin. The argument that governments are going to shut it down, that ship has long since sailed. The interest now is to regulate. It is not just in the United States. It's pretty much everywhere. And in most places, they already have much of the regulatory structure put in place. Here's Korea. Here's what Korea says. Korean official U.S. decision on Bitcoin ETF will set tone for local market. In other words, if the U.S. approves of a Bitcoin ETF, well, they'll probably have Bitcoin ETFs in Korea too. And as the U.S. goes, so goes the rest of the world. Here's an example of what's happening. It's got nothing to do with price. Bitcoin contracts set a new record on February 19th. There's plenty of interest in Bitcoin trading, irrespective that the price is down. It's not like the price went down and everyone walked away from it. Now, where did I learn this information from about the CME group? ErisX Digital. Now, who's ErisX Digital? That is the upcoming launch of a cryptocurrency trading platform for institutions by TD Ameritrade, a very big player in this space, and they are reporting on this news. Now, did TD Ameritrade set up this platform for institutions because they expect no one to use it? I don't think so. Same with Bakkt. They're not setting up a platform with Microsoft and sponsored by the New York Stock Exchange and Starbucks because they don't expect anyone to participate in that platform. Now, Fidelity. Here's an interesting... Fidelity is the largest mutual fund company. It has trillions of dollars under management, and they are launching in March which some say is already being used by some institutional investors, a platform and a storage solution, but they're going to launch officially in March. And again, Fidelity is about as big and as mainstream as you can get. And if you're interested, they posted at the end of January an update on our work. Fidelity Digital Assets is serving already a select set of eligible clients and continues product development. They're going to launch formally in March. Now, I don't know what they're going to offer. Certainly probably Bitcoin and Bitcoin storage, but maybe they're also going to offer Ethereum, Litecoin, who knows. And but that's Fidelity. And here is one of the other issues about not getting a Bitcoin ETF off the ground is the SEC is concerned about storage solutions. Well, Fidelity is working on their custody services for digital assets. Requires a new approach, but are based on sound financial principles. And they lay out in their white paper their storage solution. So the storage is going to get settled. That's one of the SEC's issues about ETFs. The other one is market surveillance agreements to make sure, or to at least be able to spot manipulative practices or patterns. And again, NASDAQ is working on that for Bitcoin, and Van Eck is looking to have its Bitcoin ETF approved. So is the New York Stock Exchange. You're dealing with companies who understand how market surveillance agreements work and how to get an ETF approved. So I would imagine that's going to happen too. All right, what else do we have going on in the space? Let's see. Samsung Wallet came out. The Samsung Galaxy S10, and it has a blockchain wallet, and it features Bitcoin and Ethereum, but you can open up a button and add other cryptocurrencies. This isn't necessarily a move that'll create adoption, but it is one that accommodates the adoption that's taking place. In other words, it's showing that there's interest in this. They're not trying to sell you Bitcoin. They're realizing that many mobile users are already using cryptocurrencies. And we mentioned there's now 4,400 Bitcoin ATMs worldwide, over 2,600 of them in the United States. This is all happening incrementally. It's not slowing down. I think that's the big mistake. People made the mistake I made in 2013. The price goes down. You think, well, that validates it. Well, that was a nice bubble. That's gone. Let's forget about it. All of the indicators indicate, that's what indicators do, that there is more and more interest each passing day in any metric you look at in the crypto space other than price. Because if cryptocurrencies are going away, there's no reason why Samsung would even bother adding a blockchain wallet to it. All right. What else do I have here? Taxes. That was another big thing people said would never happen. Bitcoin is useless because you can't pay your taxes in it. Well, Ohio announced earlier this year that they would allow companies, not people yet, companies to pay their taxes in Bitcoin. And so far, 2 companies have already done so. New Hampshire State has legislation pending that will allow residents and companies of New Hampshire to do the same. I believe it goes beyond that. I think any interaction you have with the state, you'll be able to pay your liability in cryptocurrencies. Now, what does that mean for price? Well, at some point, it probably means that another bubble starts to brew. My opinion, not investment advice, is just watching all of this stuff going on. Litecoin Charlie, right? Remember, Litecoin partnered, the foundation bought 1/10 of a bank, and that bank is now looking to, there's a regular regulated bank, not some made-up bank out of Germany, and it looks like Charlie Lee, the founder of Litecoin, said last week at a very productive meeting with Matthias van Hoff, CEO of Weg Bank. He flew all the way from Germany for 1 day to meet me. Matthias is not your typical banker and really gets crypto. Stay tuned for some exciting products from WEG Bank. Now, this was my point about Bitcoin, Litecoin. These get integrated into, not crushed by, the current payment systems, current banks, and that's why you see JP Morgan setting up their own. This isn't going away. Anybody who thinks it's going away and that it doesn't matter what your opinion of these things are. They're not. It's just like you don't like air travel. That doesn't mean people aren't going to fly on planes unless they pass this new Green Deal. It's the same with horses. Horses are transportation, period. Have always been and always will be. You have to be willing to see that. I mean, back then there were people saying the car wasn't going to last. After each accident, they said that proves it. They're dangerous. These things aren't going anywhere. Literally, they were. I'm looking at this and I'm saying you'd have to be dug in the ground against them, or just in love with your own opinion, not to see that this is happening whether you want it or not. And you're starting to see stories now. 10 reasons Bitcoin will party like 2017 for a massive bull run. This was my point last year I made all year, was eventually Wall Street will get a hang on this. They'll realize this is the easiest thing for them to push, promote, and pump, and they will. Now, they'll say, well, see, it's a bubble. Okay, but we have lived, most of us, I say all of us, the last 30 years in one bubble after another. That's how wealth is created. Now, it isn't real wealth. It is a digital illusion of wealth. Well, whatever it is, that's how people acquire wealth. They don't acquire it by saving money and putting it in the bank. That's maybe how it should be, how you're used to it, but that's not how it is. The way the world works now is central banks are buying gold. That is all. No, central banks control these economies. They control the markets. They're not based on the fundamentals that you get in the textbook and look at PE ratios and return on investment. None of that matters. You got companies out there, Zillow, Tesla, they never made any money. They still have multi-billion-dollar market caps. The fundamentals are less important. And that's why all these people insisting for years now, the dollar is going to collapse, there's too much debt, the stock market's overvalued, silver is real money, gold is real money. Okay. It may be, but the real value when it comes down to your purchasing power, you could say the dollar has lost 98% of its value since 1913. That is all I need to know. No. Those dollars today, if you have dollars and you can increase your dollars by threefold in whatever investment, whatever bubble you happen to buy into, you can then buy real wealth. You can even buy gold and silver with it. So you're starting to see these types of articles. The pumping is, I believe, is just getting started. There was another one today, bullish signs for crypto. Here's in Forbes. 3 bullish signs, I don't even know what they are, for Bitcoin, Ethereum, Litecoin, EOS. And these people, the way they look at it is the price went up the last 2 weeks. So that's bullish. Yes, it is. That is how cryptocurrencies trade. They look at the chart, they see the one up, and they say, oh, it went up 3 days in a row. It hasn't done that in 6 weeks. Whatever they do. And they draw lines and arrows and Fibonacci's and candles. And anyway, right now Bitcoin is at $39.35. That's up 1%. Ethereum at $146, up 2%. Litecoin at $49, up 1%. And Bitcoin Cash at $142, up 0.66%. See, is there anything else here before we move on to our topic of the evening? Bitcoin futures. I think we've covered everything. Yes. So there's no point in playing the Moronica song because what I'm going to discuss isn't really moronic unless you think the way what I'm talking about is moronic, but I'm not going to play music in advance of that. Okay. Let me get up the things here. All right. We'll play the music again. How about we play When Lambo by Mark Battaglia again? I see Van. Oh, sup, Lewis? Can I get a Yellen impersonation? I haven't done Yellen in a while. I think the committee wants to continue with the highly accommodative monetary policy. How's that? All right. Let us move on to, is Bitcoin a tragedy or a celebration of the commons? Now, let's discuss what the tragedy of the commons is first. Oh, by the way, Scott, no Moronica song. I'm reworking the Moronica song because I want to work into the song Bernie Sanders' recent. A lot of people say that the people in the socialist countries, they have to line up for the food. That's a good thing because in other countries, only the rich people get the food and they're eating all the food. I want to get something like that into Moronica because that is, I don't know if we're going to top that this year. That food lines are a good thing. That's a good thing. All right. Is Bitcoin a tragedy or celebration of the commons? So first we need to know what is the concept of the tragedy of the commons. So the tragedy of the commons is an economic theory. Guy's name was Garrett Hardin. And it illustrates that unless there's some private or maybe even government ownership of land, individuals, as they do, will pursue their own self-interest in using unowned land to the detriment of the preservation of the common land. So the example he gives is you have a common field. Somehow no one owns it. I don't know where this is, but there's a common field there. And people with their cattle, herdsmen, will come and use the field. Doesn't cost anything. They'll graze their cattle in an unsupervised manner. And in that scenario, without an owner to set limits as to how many cattle can come on the field, without any owner to say they can only be here for an hour or two, or to charge grazing fees, the herdsmen will bring their cattle and inevitably use the land without regard to its preservation, and they'll overgraze, and then boom, gone, no more field, ultimately destroying the utility of that land for future cattle grazing. Now, what they say is that the result occurring on common land in that dynamic would be a tragedy, because it could have been avoided if someone had been putting regulations or some type of use restrictions on the common field. It would have been avoided if the land benefited from an owner. And the tragedy of the commons theory provides a powerful argument for societal benefits of private property rights. This makes sense. If it's just all common, no one owns it, no one cares. You go and you get what you want out of it and you leave. You don't worry about the future of that piece of land. That's where some say that kingdoms are good, even though it goes counter to the concept of democracy, is because they own the country, they own the land, they want to hold on to it, and they want to preserve it, and they want to pass it on to their kids. Last thing they want to do is fight wars that don't make any sense and deplete the assets of the country. Anyway, so private property concept is that if there is an owner, it will protect the usefulness and the value of that property. So individuals who own private property will, acting in their self-interest, generally take care of the land to preserve or increase its value or to make a profit from it. So if there was an owner of that common field, now he may decide he doesn't want cattle trampling on his field, that's fine, but it would still be preserved. Or he can decide to make some money off of it and allow certain groups of herdsmen to come onto the field. Maybe that's a good way of maintaining it, to have the cattle come and graze, or the goats, or whatever it is. But again, if left to a person or an entity who has a property right in the field, they're going to take. What does it all have to do with Bitcoin? We're going to get to that in a second. Okay. Because the owner is going to take care of the land, he's going to preserve or increase its value. One could also make the argument, like Bernie Sanders would be, the government should own all of this. Ownership of the land in the form of city, state, or federally owned parks, right? Then they would control, at least somebody is a steward of the land, and they can determine what happens to the land. But in both instances, you would say that maybe libertarians and statists would find common ground that property is better off in the hands of an owner responsible for its stewardship. Now, there is a third option there where you keep the state out of it. The libertarians or the anarcho-capitalists may say is that people would collectively, the herdsmen may decide to work out an arrangement where they realize that if they want to keep this land so they can bring their cattle to it, they may work out an arrangement where in their own self-interest, they don't overgraze. Or they say, I'll come on Tuesday, you come on Thursday. But let's keep that out of the analysis for now. And that's the question. Who's going to own the property? But generally, someone has to own it, because generally, without an owner, you're going to have a problem. Because you're not going to get... It's much harder to conceive of a situation where people aren't just going to use and abuse the land and then make it unusable. So generally, an owner is required to preserve private property. That is the basis almost of free market analysis. Free markets are based on property rights. People have a right to their property. In fact, the United States was supposedly going to be founded on not life, liberty, and the pursuit of happiness, but it was life, liberty, and property. Life, liberty, and property would make much more sense. This pursuit of happiness thing, it's too nebulous. Okay, so life, liberty, and property, and that is a very, very important tenet to free market economics. And in fact, even to socialist and communist, property ownership is also important. It's just that it's owned by the state. Someone or something in this theory of the tragedy of the commons must own the property to take care of it. Now, one would argue that if it's an individual or company who owns the property, they're going to take better care of it. I'm not going to get into that debate. But at least if something is in charge of it, it should make some effort, because it owns it, to take care of it. And generally, people take care of their own property better than government bureaucrats might take care of property on behalf of the government. Now, what does this have to do with Bitcoin? Bitcoin, first of all, was created by an anonymous developer called Satoshi Nakamoto. Peer-to-peer network, set of protocols, client interfaces, you're going to get your wallets, and a currency that operates on top of all those technologies. That's what Bitcoin is. No one person, corporation, or government owns the Bitcoin network or its set of protocols. Now let that sink in. No one owns it. No person, no corporation, no government. So under the theory of the tragedy of the commons, a system that no one owns or operates, it is destined to fail, right? Because people are just going to come in and take what they want out of the system, and then it's gone. If you don't have an owner charging, for example, if Facebook didn't have an owner and people just went on and did whatever they wanted and didn't pay for anything, and no one was charging for advertising, the system would fall apart, because who would pay to keep the servers running, to keep the Facebook service working? No one. Be gone in a few weeks. The electric bill wouldn't get paid. The servers wouldn't get paid. The people writing the software to keep the Facebook interface working would just collapse, and it would be gone. That's true with anything. If someone isn't running the network, then it's going to return to, they say, to the normal state of affairs, which is chaos. Someone has to control, someone has to own a piece of property or some system in order for it to work. Otherwise, you're going to get the tragedy of the commons. Now, Bitcoin, however, works as well as it does precisely because it lacks an owner. The decentralized nature, or the lack of an owner, is a design feature, not a flaw. No dominant miner or controller of the hash power is what keeps Bitcoin trustworthy. The ability of everyone in the commons to see all the transactions in the Bitcoin blockchain provide for transparent security and trustworthiness in Bitcoin transactions. Thus, Bitcoin works best in that no one owns it or controls it. That's a celebration of the commons. That is exactly the opposite. Think about why you want to do business with a particular company. They give you good value and you trust them. They get rewarded for the value that they provide and the trust they engender. If a company, you don't trust the company and they give you a crappy product, they charge you too much, whatever it is, they're not going to exist. And free markets are based on competition amongst those who control their offerings. They control their property that they sell to you. They control their services that they sell to you. And they use competition. Now, Bitcoin doesn't rely on any of that. It works best because no one owns it or controls it. Now, that's why governments hate it. What are governments used to doing? They're used to controlling and owning stuff. Crony capitalists. That's why they like governments. They can have the government help control what happens to their property. Now, a lot of, I would say, hard money or gold bug libertarians, they also are against Bitcoin, some of them, because if there's a system in which there's no owner, meaning there's no John Galt style person who's doing better than everybody else and is leading Bitcoin, the CEO of the company, the master of the universe, the whole Ayn Rand thing, that runs counter to the traditional free market concept of placing one's trust and money in an individual corporation that provides a competition-tested product or service and is answerable at all times to customers for continued business. Okay, Bitcoin doesn't care about you, doesn't care whether you come back. They're not trying to get your business. There is no Bitcoin. There's no John Galt, CEO Bitcoin, trying to get your business, trying to outdo the competition. Rather, Bitcoin requires trust in the blockchain system and the public ledger. That's it. Now, to some people, that might sound socialist. Communal money, no issuer, very collectivist. Yeah, it's collectivist, but the collective doesn't really own it. The collective only really verifies it, which is a very unique concept, Bitcoin. It doesn't fit into any... I don't think people actually thought this through. Obviously don't. Bitcoin is going to zero. That is all I need to know. It is a digital illusion of wealth. End of story. Period. Okay. Now, there's also a problem with people say, well, there's no intrinsic value. That's a classic gold bug analysis. Gold has been in money for thousands of years, period. You can make it into art, jewelry, electronics. Doesn't depend on electricity or protocol or network. That's all true. I make those points all the time. Gold is not, or Bitcoin is not digital gold. Anyone who says that, they don't understand gold. Gold just is. Gold doesn't require a system, a protocol, doesn't require miners, doesn't require on-ramps, doesn't require wallets, doesn't require anything. Gold simply is, especially after you've mined it and you've forged it into a coin. It doesn't need to operate. It doesn't. Bitcoin is not digital gold. Bitcoin is something entirely different. Gold is something entirely different. I think the problem people make is they try to make them be something that they're not. So gold cannot be transacted the way Bitcoin can. But Bitcoin can't be made into jewelry. I don't even know why people try to make them out to be the same thing. They're not. Same with gold and silver. They're not the same thing. They're different colors. They're different properties. Anyway. Bitcoin is valuable precisely because it doesn't have an owner. And also because it is a digital illusion. It really is. It is a digital illusion. But because of that, it's outside of the state's confiscatory grasp. Why? Well, where do you go to get the Bitcoin? So, for example, there was a guy named Robert von Nothaus. Probably the name wasn't Robert, but it was something called Nothaus. And he decided he wanted the sound money. So he started issuing his own currency. The mistake he made was he called them dollars, which he shouldn't have done. I think he would have gotten away with it even with dollars. And he wanted to back his money, his currency, with gold and silver. So he made these Nothaus dollars. And you could store $100 worth of gold. You can buy the gold from him, and he would give you certificates, just like they did in the olden days with the goldsmiths. But apparently it was all backed 1-to-1, and you can either have a $20 silver coin or a $20 certificate, but whatever it was, you could go to the vault with your certificates, and he would give you the gold. And it was just you were able to trade the certificates. Well, the government didn't like that. U.S. government, they thought that was counterfeiting. It had the word dollar in it. So what they did was they went to, and it was the same with e-gold. They didn't like that either. They close it down, and they go and find out where the gold is, and they take it. The reason they're able to do that is there's an issuer of the money. There's a guy. And if you trust him, and it worked, and you like Nothaus, von Nothaus, he was getting a good business. And that's how capitalism works. Government comes in and says, we don't like you competing with what we do, which is issue money, issue currency. Well, then they shut you down. Well, Bitcoin comes along, and there is no Mr. Bitcoin. So first of all, there's no guy, no gal, no boy or girl or man or woman or he or she or whatever pronoun you want to use. I don't want to misgender the non-existing Mr. Mrs. Bitcoin. So what does government do with it? Well, there's nothing they can do with it, because not only is there no person that's running it, there's nothing there to take. Why? Well, where is the Bitcoin? Well, it's on the blockchain. Where's the blockchain? It's on thousands of different computers. You can't go and take all the Bitcoin. It doesn't exist in one place. In fact, when you buy Bitcoin, you don't even have it. Even if you store it in your Ledger Nano S or your whatever, your paper wallet, and you stick that in the safe deposit vault. Your Bitcoin isn't even in the safe deposit vault. It's not in the Ledger Nano S. All that's in there is the private keys that you're going to use to get your Bitcoin off the blockchain. So the Bitcoin they can't even come and get your Bitcoin because it doesn't exist to come and get. All they can do is try to unlock it from the blockchain. It's a very, very, it's unlike anything ever before in that it has value, even though it's not the product of one person or one entity, and it's not controlled by anyone. And it is, in a sense, you would think it would fail because no one is in charge of it. And yet it works because no one's in charge of it. So, what does that mean for the future? Well, the biggest threat to Bitcoin doesn't come from Bitcoin is going to zero, and I will have nothing to do with it. Those people have not, again, if you're not interested in art, like I use Jackson Pollock, you not liking it isn't going to change that there is a market for Jackson Pollock. You can write articles till you're blue in the face, Jack the Dripper, he sucks, I don't like him, it's a bunch of garbage, and you can have petitions signed that say Jackson Pollock is an idiot, I don't like him, he's not art. You can give speaking tours. It's not going to change anything. And that's the same thing with people who keep saying Bitcoin is going to zero. That's your opinion and you're entitled to it, but that's not going to change the market for Bitcoin. Governments also, when they can, one of the things, governments have a much bigger say in what happens to Bitcoin than people who just don't like it. Why? Because governments can do things through taxation and regulation. Now, I will say, when I wrote what I wrote in 2014, I didn't know how governments were going to view this. I know now they're not looking to tax it and regulate it into the ground. They're trying to encourage it. They're trying to foster its use. That's clear. If you don't see that, you're not paying attention. You're living in what you want them to do because you don't like Bitcoins. You want the government to come in and do all this. Now, there are people who say that if the government tries to tax it and regulate it, then it'll go underground and it'll be just like the war on drugs and it'll just make Bitcoin stronger. I don't agree with that. There's no thrill or addiction or financial incentive in using banned Bitcoins. If government, the United States came out and they got together with the IMF and all the big world banks and they said, you use it, you catch you go to jail. And they said, how are they going to catch you? Doesn't matter. If you do get caught, you go to jail and you go to jail for life. They could do that. They're not going to. But if they did do that, I think that would be the end of it. Because it's not like using illegal drugs where people are addicted. They have to have it. It's worth the thrill. There's no thrill in transacting with Bitcoin if you can get killed for it, if you don't have to. It really would destroy the system. But again, they're not doing that. I mean, unless you're just a fanatical Bitcoiner and you just say, I have to have my Bitcoin. I don't think people are going to risk fines and jail sentences, life sentences to use Bitcoin. I mean, the idea of Bitcoin is the convenience, not the thrill of going to jail for using it. And then they say, oh, it's the same thing with like when they try to shut down pirated music. No, same thing. People want something for free. They're willing to break the law. They figure you can't catch me. Now, if pirated music, if they said they would kill you or put you in jail for life for using pirated music, then people probably wouldn't have done it. But it was easy to do, and they thought they could get away with it, so they did it. So the only real threat to Bitcoin right now is nothing to do with governments, has nothing to do with... Bitcoin is a digital illusion of wealth. That is all I need to know. And I will never buy Bitcoin, and it is going to zero. Those people have nothing to do with the price of Bitcoin. That has nothing to do with whether it succeeds or not. The real threat to Bitcoin is the 51% control group. Now, this is where the tragedy of the commons comes back into place again. And the celebration of the commons. Now, we said it's a celebration because it's actually better that no one owns it. Here's where the tragedy comes in. And this is where Bitcoin proponents think that even a 51% attack, if it happened, would not be a big deal. Because if someone or some mining pool did control the computational power, 51%, to mine Bitcoin to verify transactions, that entity would now, in a sense, control the Bitcoin ecosystem, and because they own it, they would act in their self-interest and be good stewards of the control that they had obtained. You can think of Bcash is probably in that position. But then the trustworthiness of the Bitcoin system in the event of that controlling entity emerging would no longer be relying on the system of math and not having to trust anyone, but you'd be rather relying on the human owners, that they would ensure that they would be good stewards of the power that they had controlled. They may or may not. Now, what if the controlling group is the Chinese government? There's Chinese mining pools out in China. I think you could probably put a few of them together and get 51%. Chinese government can say, okay, we now tell you do this, now go do that, and now the whole system is screwed up. So that's where I think the only real threat to Bitcoin is its advantages, that it's based on math, not human incentives and motives. And it can only be sustained, I think, and insured without this controlling owner. So we'll see what happens. Anyway, those are my thoughts on Bitcoin. I want to see what you guys have been saying in the comments. If you're still there. Oh, there's still some people here. All right, let's see what we got here tonight. Ann is here. Pablo is here. Van Ho, we've already done our Yellen. Yeah, Barrick, that would be a big deal, wouldn't it? Jack says, if you like Bitcoin, you like the fact someone owns 1 million Bitcoin in their wallet and your account balance is subject to their ultimate decisions. That's true with cash, too. I mean, the Fed can just print up $4 trillion. I mean, that's true with any monetary system. All right. I just can't do Bitcoin because we don't know who created it. Do you know who created the wheel? I can't use cars because I don't know who invented the wheel. Sorry about that, Jack. All right, let's go on. I like Litecoin, not Ethereum. Okay. And Morning Mayan is here. All right. Here's Jack. Also, when you make some gains, how do you get your profits? Through a bank. It is BS. Okay. It is BS. That is all I need to know. Rad Vladdy. Crypto Shrugged author. He's been paying rent in Bitcoin as well as many restaurant tabs and bars for 4 years now. So there, he doesn't have to go to a bank. But that is all I need to know. Unless you have a bank account, you cannot use Bitcoin. All right. Let's see. Yeah, I like again, when people point out flaws in Bitcoin, you can point out flaws in anything and anybody. What if there is an EMP? Yeah, okay. What if there's an EMP? What if someone steals your gold? I mean, there's so many, there's nothing is perfect. Nothing works great always to the detriment of everything else. That's why there's a thing called diversification of assets. That's why you don't put all your eggs in one basket. And this show isn't even about investing or investment advice. But when people point out negatives, they point them out as if they're dispositive, meaning, and now it has no value. Because I have shown that if there is an EMP, it is worthless. And therefore, Bitcoin is worthless. No. It means it's worthless on the chance that there's an EMP, and it's worthless for the period of time that the EMP has disabled the blockchain. That's it. And then you value what's the likelihood and the probability of that happening. It doesn't make something worthless because if something can happen, you assume it will happen and it's going to happen tomorrow, and therefore it is of no value. All right. That's like, no, I can give too many examples. I think you can come up with them on your own. All right. Well, you can't over 10,000. This is Jack. $10,000 of gold out of Canada about reporting it. Also, gold weighs a lot. Yeah. May not be feasible to move Bitcoin, though. But again, the uses of gold and Bitcoin aren't just to leave Canada. Now, if specifically your issue is, I have $10,000 worth of wealth in my life, and I have to get out of Canada, how am I going to do it? Well, That doesn't even make Bitcoin more valuable. It only makes it more valuable to you. It just means you're going to put your 10,000 Canadian dollars into Bitcoin so you can leave the country, because that's the easiest way for you to do it. That doesn't make Bitcoin more valuable. It makes it more valuable to you at that time. Rad says Fidelity just asked to take the lightning torch today. Yeah, this is where I mean, Jack from Square and Cash, Jack Dorsey, the guy who runs Twitter, Tesla, they're all talking about it. This thing is cat's out of the bag. This is not going to be crushed by government. These are crony capitalists. These are companies that are so big, trillions of dollars. They want this to happen. They know they can make money off of it. If your goal is store of value and you have a house, PM's a no-brainer, says Crypto Shrugged Author. Yeah, store of value. Okay. By the way, I don't mean to ridicule anybody, even though I do, but it's not meant at the person. It's meant at the sentence that I see on the screen. I really do appreciate the comments that are coming here. Okay. So, Crypto Shrugged Author says, for some like myself, who lives out of a backpack and travels the world, is open to investing in a payment protocol where I can move around the world with my wealth, where crypto has its place. Yeah. But again, how many people, if that's the only value to crypto, is for traveling nomads, well, it have limited value. It's not just for that, but it does have that value. Rad. There's too much momentum, too much capital being put into crypto for this to go away. That's my point. It has nothing to do with my opinion. It has nothing to do with what I want to see in the world. That's just, that to me is a fact. Too much momentum and sunk cost. Yep. You don't think that Bakkt raised just 3 weeks ago $187 million because they were like, yeah, this crypto thing, let's just forget about it. That the New York Stock Exchange, Microsoft and Starbucks, Fidelity, TD Ameritrade, all these investment funds have put money into it, and 500 million went into one of these stable coins because they just say, this is just useless. No. All right. What else? So many good comments. I'm not commenting on them. I am reading them though. Jack says, let's not forget the public have tricked the public. That's what the banks have tricked the public in 1929. We always do what the banks don't like, correct? Well, if the banks don't like crypto, but secretly they love it, you know. Well, here's something, though, Jack, to keep in mind. It's not that binary. And I think there's two views on Bitcoin, and I take the third. One is Bitcoin will eliminate central banks. Be your own banker, and you can have Bitcoin. It is a peer-to-peer, and you don't need banks, and you can just do what you want with Bitcoin, and it is liberating, and it is free. Okay, that's one view. That's the capitalist view. That is the whole promise of Bitcoin and the bankers. And then there's the banker view, that they're going to crush it because they know it's competition. Governments are going to crush it. They don't like it. But the third view is, my view is, the anarcho-capitalists can still do whatever they want with their Bitcoin peer-to-peer. Because the banks aren't changing the fundamental nature or tenor of Bitcoin. What they're doing, though, is they're integrating it into payment systems, and they're tossing it into ETFs and tossing it into 40 Act compliant storage systems. It doesn't mean that Bitcoin loses the properties. So you're going to have both. A good portion of Bitcoin is going to be locked under key and traded and derivatives and all the other stuff. Same thing they did to gold. And then some of it will be used the way it was designed to be used. Pablo says, my background is Chilean. I was there for a while, but north of Santiago. Okay. What else do we have? Janet was highly accommodative cheerleader. Just saying, loose and easy monetary policy. All right. Guess what? The ads are back. What are we talking about? Oh, cash for gold that Jack is talking about. Yep. Yep. All right. Scott says, only a lot of the sparse, poor grazing property out west shoots holes in the crazy theories about what the U.S. owns. If the cattlemen wanted and paid taxes on it, they'd have it. Okay. You guys are talking. Rad Vladdy. Everyone who owns Bitcoin has a financial interest in its preservation. That's private property. 100% of Bitcoin is owned. All those owners do the best they can for the value of the coins. Well, that's a very interesting way of looking at it. Yes. But it's communally owned. Yes, that's a good way of looking at it. But actually, you owning Bitcoin is not what maintains the system, because the miners, you have nothing to do with the miners. So no one owns either as a group, other than perhaps the miners. But even with the miners, they don't. It's an important point. There is ownership for sure, Rad. But it's not the same type of centralized ownership. Oh, here you go. It's decentralized ownership. Rad says, the tragedy of commons is not a function of control over the space. It's a function of ownership. Yes, and therefore incentive to preserve and grow and advance. But what they're controlling is over the space. If they own the space, so they exercise their control over it, and they preserve and grow. So on. Okay. DB Stupid is here. John Galt knew better than to buy crypto, says Scott Burdell. Jack, Smaulgld making valid points about not knowing the creator of Bitcoin. I don't know why that matters to people. Because it would matter if, okay, in a traditional business, let's say someone's trying to sell you mugs online, just some guy. You don't know who he is. You're not going to buy them from him. You don't know who he is, why he's selling mugs. Why would he sell you a mug? What interest would you have in buying mugs from someone who you don't know, who doesn't have a name, is just selling mugs, and you can't find out where they're coming from, why is he selling them, where did he get them from? Yeah, that makes sense. You kind of want to know who you're buying your mugs from. You want to know what the company is when you buy shoes. You don't want to feel like you're dealing with the person doesn't exist or may go away. That does matter in normal capitalist interactions in markets. But for something like the wheel or Bitcoin, it really doesn't matter. It's not important because you're not relying on the inventor to do anything for you. Whereas in the mug example, you better hope Lewis exists, and that when you send him $23, he's going to send you a mug. You see, there is a reason to know who I am. You don't need to know every detail of my life, but you need to know that I have taken orders for mugs and I have filled them faithfully, and that I have a track record of selling mugs. But in Bitcoin, you don't need to know. You don't need to know who invented Bitcoin. All right, Silver Stacker for life. All right, well, you cannot trust no company, and there is people out there trying to sell crypto. So Smaulgld, you are wrong on that. It is just like people that try to pump gold and silver. I'm not pumping Bitcoin. I'm explaining how it works. I'm explaining what's gone into it. I'm not pumping. I care less if you buy it. It doesn't matter to me. I don't want anyone I could care less. It really doesn't matter. But Silver Stacker for life says, you can't trust no company, and there is people out there trying to sell crypto. You are wrong. So it is just like people that try to pump silver and gold. Yes, that's just what it's like. It's a great analogy. When I start to hear people saying they're saving in terms of Bitcoin, I will start to respect it. Well, again, Bitcoin doesn't need your respect. That's what's interesting. People say when they start taking it for taxes, then, well, they take it for taxes. There are people who save in Bitcoin. In fact, Coinbase, as it's set up, I know this because that's how you guys, when you send it to me, they have a way where you can make monthly purchases in Bitcoin. So people do that. I don't see why that would have anything to do with whether you respect it or not. Okay, Rad, regressive theory. We got an Austrian here. Regressive theorem seems to apply to how something starts as money, not why it continues as money. That's correct. Like in gold, it was already valued as a commodity. People wanted gold. They made it jewelry. Same with silver. They had uses for gold before it became money. Bitcoin already jump-started and has some moneyness, so theorem is moot at this point. Yeah, the regression theory is, I believe, is a way of rationalizing how gold became money. That doesn't mean, and I used to think this, but I used to think this, that you can't have money without the regression theory. No, you can. It's just, there's value in it as it works. And there's value in it as a transaction protocol. And there it is. So it works as money. Good point, Rad. See, Rad saves in Bitcoin. So DB stupid, now you have to respect Bitcoin because Rad saves in Bitcoin? I don't know. I don't know if that makes a lot of sense. All right, silver stack for life. Well, then you save money in Bitcoin. Go back up the truck. LOL. Well, if someone backed up the truck, and again, I'm not advocating you do this, but 2 months ago, if you had bought Litecoin at $22 and you backed up the truck, which in a sense I wish I had, it's at $48 now. In 2 months, you could have doubled your money. LOL. I love when people mock the fact that people have made fortunes in Bitcoin only because it fell from 20,000 down to 3,000. Most everyone, other than the people who bought during that period of time in November, December of 2017 or through 2018, made a lot of money. A lot of people made a lot of money in Bitcoin. All right. Bits or Satoshi. Let's see. Morning, Mayim. I love Pollock. Yeah, I'm not against Jackson, but I just had to pick out an artist. I could have picked Juan Moreau. I could have picked Picasso. I could have picked Pizarro. I could have picked anybody. It's just I picked him because I know he gets his fair share of trashing. Litecoin is good to buy coffee in. All right. I think we're running up to the end here. I think we are. Let's see. Jack says, Philip, when was the last time you experienced a power outage? It happened to me for a month during a national disaster. No one's prepared. No one can use my QR code for Bitcoin. Yeah. And that's when I say silver is probably the best medium of exchange in a power outage. It's better than gold. Small bits of it, you can exchange it and it works. Guys are talking about running nodes here. Philip, if the power goes out, our debit credit cards won't work either. That's right. This isn't about payments. It's about monetary sovereignty. Okay. Rad, miners don't control Bitcoin. Bcash split. Segwit 2x proved that. The node runners control Bitcoin. Well, that's true. If a miner attacks my node, doesn't verify the block, I run the node software. Okay, that is definitely true. All right. Pablo's making a very important point. Just stay diversified, game changers, including mugs. That is true. DB Stu, what I meant by respect is I will store my wealth in it when I think it's a better store of wealth than gold. Well, I don't think it's a better store of wealth because of the fluctuation. But there are people that do save in it. Now you could think they're morons, but they do it. Transactions are not that common. Yes, and phone use wasn't that common when the phone first came out, and there weren't that many cars on the road when cars first came out. What I'm pointing out here is, if you wait, I mean, this to me seems inexorable. If you wait till everyone's using cryptocurrencies, by then it's already happened. It's creeped upon you. It is very much boiling frog. And I like to use the ATMs, and you just see they keep popping up to the point where 3 or 4 years from now, you're not going to think anything about there being ATMs around. They're just going to be there, and you're going to wonder, when did that happen? Happens incrementally. All right. Well, I think that's it. I want to thank everyone for the comments and for listening. This was not a game-changing, I didn't have breaking news or anything, but I think it's important to get a deeper understanding of what all this stuff is. Not because you're going to invest in it and figure out what the price is, to understand what it is, because most people, they have the most shallow knowledge, and that is all I need to know, and that's all they want to say, and they like to just stick to a snapshot in time where they learn something, or whether there are no transactions, or no one is using Bitcoin, or whatever it is, and they don't evolve from that point of view, because this is a changing space. There's no two ways about it. And some people just want to look at the price, and then, like Robini's like, the price went down, I'm proved correct. Proved correct about what? He's been saying the price should go down for 7 years. So it went down finally? No. When he started complaining about it, was $12, and he was complaining about it was $200. He's been complaining about it the whole time. But this is what people do. They think they're looking to vindicate their point of view, and not realizing that the whole environment is changing. So whatever you believed 2 years ago, 3 years ago, 4 years ago, if you were to update your knowledge base, you might not hold that opinion. But if you start with that opinion, you're just going to look for information or make sure you don't find out any information that doesn't contradict your opinion. I want to thank everyone for joining me tonight. And if you do have any spare Bitcoin or Litecoin, please feel free to hold your phone up to the QR code and donate it to the Smaulgld channel. Or you can become a Smaulgld patron, or you can donate via PayPal or check or money order. Thank you very much. And don't forget, if you don't have a Smaulgld mug, that's the purpose of this channel, is to sell you mugs. So please go to smaulgld.com, get yourself a Smaulgld Classic or Super Classic mug, which I will ship out directly, priority mail, which costs like $7, $8, $10 in the continental U.S. Or order your mugs. We got some till the end of the month. I have a Smaulgld Gold Game Changer mug. It says Game Changer on the back. You can play with the language. You can make it in any font you want. That's the Smaulgld Game Changer mug, limited edition. Goes off the market at the end of February, or you can get yourself a Smaulgld Beer Stein. That is a very fine mug there. And let's see, got anything else? Yeah, I'll leave you with that. For those of you who are enjoying an adult beverage this evening, that is a Smaulgld Beer Stein and the Smaulgld Frosted 16-ounce mug. The Beer Stein is 12 ounces. Thank you very much, and have a good night.